it's actually not down as much as you think now. Stop listening to the news as much, because bad news sells, unfortunately. Yes, we do get the odd good news story which sells, such as the gentleman who's enjoying his 100th birthday, marching up and down his garden and things like that. That is a genuine good news story. It's raised a lot of cash, and it's made a lot of people smile. So that's what you call a soft news story, good news story. A hard good news story, which is 3 weeks of market growth, not that interesting. It's unfortunately, it should be interesting because it's about our money, or it's about everybody's money. But I think I would urge people to log into their apps and check things. And Diane, on that point, the development team, they've just updated how we handle valuations, haven't they, on people's mobile apps and on their websites?
Yeah, we have. We've just promoted again. It's a lot of what we do is behind the scenes, so it might not necessarily be evident to an end user. But yeah, the valuations. I think previously they were kind of running within 48 hours of knowing what the value was, and we're now same day or within 24 hours. So I think we're possibly the first business in the UK to be able to do that.
Yeah.
Yeah.
So, certainly for mutual funds that we invest in, that type of pricing is great. And that was really based direct on end investor feedback. When they've been tracking volatility at the moment, we had some emails at times when the markets would go up and a client would log in the next day and say, "Oh, I'm not up. Why aren't I up as well?" And probably 2 points of note on that. That was because of the previous delay, which you alluded to, Diane, which we've now brought out that new bit of technology for that. So it's going to be a much more live update. The other point probably to mention, and probably one for you, Chris, is that although markets going up or down is a proxy for what our end investors' portfolio should look like, it's probably not the definitive, because we're not tracker funds, are we? We're invested in different instruments.
No, absolutely not. I think, from our perspective, we invest in what we call multi-asset. So it's not just invested in equity markets, it's invested in bonds, it's invested in different currencies, it's invested in different precious metals, it's invested a little bit in property, it's invested in so many different ways of trying to offer what we call diversification.
Yeah.
So diversification is basically a proven way to help investors deal with the volatility like we've just seen recently. And what you're doing is you're spreading your risk around lots of different assets. So what will happen is, the portfolios obviously will either benefit or detract when equity markets go up or down. But there are so many other moving parts within the portfolio that have the ability to help add to return, to smooth volatility, which is a great feature of the portfolios themselves.